Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Friday. It's January 15th. Happy Friday to you guys. Hey, we got a full plate here, so we're going to jump right into it. We got retail sales, as we kind of indicated. Friday was going to be the big day this week with a lot of the data, and as you can see, we got a lot here. So we'll start off with the retail sales. We had a 0.4% back in November, and the forecast was supposed to dip. It didn't go as much as it dipped the expectations, but it did settle in at a negative 0.1%. Now, if you take out autos, it's very similar. We had a 0.3% in November, and it was supposed to again dip slightly, but it did dip a little bit more to negative 0.1%. Now, producer price index. This is the wholesale inflationary numbers, and again, we've been seeing some pullback on the inflationary and the wholesale side of things. So things are getting a lot less expensive for them. The costs of producing goods and services. So back in November, we had a 0.3% increase, and then it came in expectations at negative 0.2%. Empire State Index. This is the manufacturing in the New York region. As you see, it worsened even. This came basically during the recessionary numbers. So this is we've been seeing a lot of drops here in the Empire State Index, which is the manufacturing in the New York region. So we had a contraction of 6.2 back in December, and it even furthered at negative 19.4. Industrial production dropped again. Back in November, we had negative 0.9, and it dropped down to negative 0.4 after we had a forecast of negative 0.2. So improved, but not quite to the improvement we needed. Capacity utilization also worsened a little bit from 76.9% all the way to 76.5. It dropped more than what the forecast of 76.8. And we got consumer sentiment. There's only a real bright spot of what we had here, which is 92.6 back in December, and it jumped up to 93.3, a little bit higher than the expectation of 93.0. Last but not least, in-business inventories, it seems like they're worsening, so businesses aren't stocking up a little bit to show, and that usually is a good sign of expansion, and instead they're actually showing some contraction in their inventories from negative 0.1 to negative 0.2% for November. Let's take a look here. Stock market's way down this morning. Dow's down like negative 375. Yesterday we had a good day, and pretty much that's in jeopardy of being wiped out today. What kind of led off the market was the Chinese banks. It came out that Chinese banks have been limited their lending back in December on concerns that maybe the economy's slowing down enough where that they're afraid that maybe they're going to get too many bad loans. So they really curtailed their lending practices in the month of December. And of course, China wanted to try to get some more liquidity in there. So that kind of spooked the markets over there and kind of created a global panic a bit. The biggest thing over here, however, is of course the oil dropped again after going up slightly. Yes, up to $31. It dropped down to $29 a barrel today. So we've been getting the seesaw effect with oil dropping, and this could continue to drop when Iran starts coming into play. So expect possibly even cheaper, especially if Iran and Saudi Arabia are still at it. They could try to create more of a glut of oil supply. And then there's a comment made by a Fed member, Dudley. He's out of New York, and he felt that the economy is still moving forward. He was a little optimistic in his statements, basically saying that he thinks the economy will be growing enough where the lower pressure the unemployment rate down further. He thinks the unemployment rate will go down further, and that the economy will continue to move along here. Bond market. Yesterday we got a pretty good one. We did close just a hair above the 200-day moving average. The 200-day moving average yesterday was at 103.75, and it closed up 3 basis points higher at 103.78. So that was really good. We had this seesaw effect all day, as you can see, with kind of that star effect, and it just traded a hair above it. And then today we woke up and jumped up even further. So right now we're about 31 basis points higher than where we left off yesterday, which translates to better rates today. Now, obviously we want to see if this continues, could stay above the 200-day moving average, which will give us better rates. But today we definitely got some better rates from where we left off yesterday. So excellent news for these bond market or people who are looking to refinance or buy homes and stuff like that, because the rates just got a little bit better today. And it looks like they could potentially continue to get better, especially if we keep having bad news in terms of oil prices. Well, at least it's good news for the consumer, not so good for the companies, as consumers are benefiting lower gas prices when they go to the pumps. Also, Monday's a holiday with Martin Luther King, so the markets will be closed. We won't be doing this report on Monday. So next time we'll see you will be on Tuesday. So you guys have a great long weekend here. Thanks for watching. We'll see you guys on Tuesday. Take care. Bye.